Hey, welcome everybody to the 40 Finance channel. What a difference a day makes in the stock market. And today is not nearly as strong as yesterday, but I'm sure that you all saw the huge move that we had after the inflation report yesterday. But there was another thing at play, which is maybe even better news in the long run when it comes to earnings, and that is the dollar, the strength of the dollar. Took a little step back. And that's important, and we'll get into that in just a little bit. But I think what's really important right now, not so much to figure out, is this run going to continue infinity through the end of the year? I don't think that that's going to happen. But what I do think is very interesting on these huge days is taking a look at which stocks were successful, which stocks, responded the most to kind of the CPI and the dollar report, because even though, you can't say it's going to happen that way all the time, it is a good indicator that perhaps some of these stocks that are beaten down are just waiting for the right mix of news, and we might have got a preview of that yesterday. So there's a couple of those things that I'm going to discuss here. Kevin Hawthorne, good to see you. And here we are right now on Seeking Alpha. This is the top holdings of the QQQ that I set up here, okay? And I'm on the performance tab if you're playing at home. By the way, Seeking Alpha is having a big sale right now. $99 for an entire year of their premium service. I talk about it all the time. My affiliate link is in the description. Help support the channel if you're interested. But we're looking at this performance tab, and the lowest segment that they do on the performance tab is the 5-day performance, okay? So I'm sorting the sort of stalwarts of the QQQ in order of their top 5-day performance. And you see who's on top here. It is Meta, who for the year to date is down 66%, but in the past 5 days is up 23%. All right, and we know Meta's gotten crushed, but we also know that they are working on their layoffs, okay, and that the dollar, which has hurt them to some degree, has also lifted Meta. So Meta, to me, at least in the short term, is a good candidate of a stock if you're looking for something that, is it at the bottom? And we might have seen the bottom. And the 52-week range bottom that you can see right here is 88.09. So if you're looking for a rebound recovery, maybe today isn't the day, because we don't know when the next era of bad news is coming. But watch it at this price, and you know that eventually the things that are weighing on the market, as we saw yesterday, the things that are weighing, they are going to clear eventually. All right? It may not happen by Christmas. It may not happen by Valentine's Day. But when you start talking about March, April, May, June of next year, if you're a long-term investor, you got a nice preview of who can rebound in an effective manner. And these aren't penny stocks, right? Meta is not a penny stock. It is a huge company with huge cash flow. So to me, it was most interesting to see how much that jumped up, because really, from a business standpoint, not a lot changed at Meta except for the layoffs. All right, next up we have Adobe, plus 15% in the last 5 days. They're low, 274, okay? They're down 41% year to date. They had, a nice boost yesterday coming off the bottom. So is the bottom in for Adobe at 336? I'm not going to say that that's the bottom, but I am going to say that we are starting to hit a point where if you're investing for the long term, it's really hard to argue about picking up a quality company like Adobe. I haven't looked at their projections much here. Let's see where their earnings estimates are coming in for next year. Okay, so November 2022, Their fiscal period will be ending here this month, and I guess we'll get a report of that in December or January. They did grow 10%, but look at this next year. You know, these are projections, but double-digit EPS growth. Then you go down to revenue. They're going to hit double digits this year, unless something goes horribly wrong in November. And you got the same projected for next year. That's a pretty strong value proposition for a company like Adobe, especially when you see the moves that it's made off of the bottom over the past 24, 48 hours, right? PayPal, this is a stock I own. The low is 67. It's lost its absolute shirt year to date, 54%. I think PayPal, you can make an argument, is floating near the bottom, and they may have seen the bottom. Their earnings report was really not that bad, all things considered. They came in, you know, right in line with expectations. They have more work to do. They need to keep developing their product mix, which I think they're doing. But as a PayPal holder over the past couple years now, it's, you know, I think it's fair for everybody to say, show me first, because that's where I stand. All right, who else do we have? So chips yesterday in general, the chip industry, which has been beaten down so bad. So whether you're talking about NVIDIA or AMD, those are the two big names that have run down the most. They're both hitting double digits in the last 5 days. And I talk about them all the time on here, but AMD in particular is one that I think is worth watching and considering. Like, how many times are you going to have an opportunity to buy companies like this at their conceivable lows? 160 may not be the lowest price, but we are starting to see the clouds clear. And so building up a position for the long term, if you like one of these in particular over the other, it could make a lot of sense, all right? Microsoft, for the year, minus 28%. They jumped 10% over the last 5 days. So signs of life, they had a low of 213. They're at 244. I think the last time I did a cost projection on them, or excuse me, a price prediction, it was in the 250s. So these are just some of the names, the biggest names, rather, of the QQQ, and you see what's happened just over the past 5 days. And let's be honest, it was really just yesterday, okay? Because if I remember correctly, Wednesday was a down day. Let me type in the Qs here to verify that. Let's see, last 5 days. So 11/9, is this going by the hours? Yeah. So 11/9 was, yeah, it was a down day. I don't know exactly what that percentage is. And then yesterday was 11/10. QQQ was started the day right off the bat up 4.6%. And then I have to mouse over to find 4 p.m. here. Finished the day around plus 7%. So huge day for the Qs, of which you guys know I'm a huge fan. And we were really starting to wonder where that bottom might be, okay? And to be fair, there's only this little blip right there. What's up, Lion, Derek, Russ, how you doing? You see this little bump here represents all the progress we made yesterday. Listen, I may not be out of the woods yet, but what I will tell you about the QQQ, and I study it quite a bit, and let me see if I can give you something here. These are the holdings. The best place, if you're doing valuation estimates on the Q, if I can get this menu to open for me. It's like my mouse hovers over it, but it won't open. La-di-da. All right, so if you go to this main page on the Invesco website, hopefully that's showing up. They do run the forward PEs on this. Okay, so let me see where this is at. It hasn't been updated since November 30th, and forward price to earnings at that time was under 20. Okay, that's pretty good for the Qs. I'll just leave it at that. And what we know about as of September 30th, I believe, let's go back to this here. If we go back that far, here is September 30th. No, it's not. Here is September 30th, 267, okay? So we were reaching a point even further below a forward PE of 20 for the Qs. So, there's a lot of talk in the market right now with risk being off. What is a fair valuation? That's just a question that you'd have to answer for yourself. But we're back above that 267 line now. I don't know how much further we have to run, but you are starting to see perhaps the makings of a bottom, and it's something to watch out for. On my hand with the Qs, I'm taking a little bit of the bounce back because I am down, I think 20-ish%. We'll take a look at that in a second. And then on the TQs, I'm down even more than that. I think cost basis of 40, we're at 21, 22, something like that today. So I'm gonna wait to see a little bit more of a pattern show up before I go diving in. But for me, it was a lot of pressure off yesterday just to see how high things could bounce if we ever got good news. And I think that's what we were all waiting for. I like Lion's advice there, buy good companies, don't overpay, do nothing. And I think that is super duper fair. And I think we've all learned some very important lessons over the past couple years on how quickly, when you talk about don't overpay, right, which Lion says, I overpaid for a lot of things. And to be honest, looking back at myself and trying to think about it and how I really am rooted in fundamental analysis and some of the prices that I paid, I think it was just boredom. I think boredom comes into play. You spent more time on the computer, you're more in tune with the market, there was more names flying around the screen, and I know I jumped at a few shiny objects, absolutely for sure. And what I'm trying to do now is, I booked a couple wins in there, and I'm trying to, navigate my way out with a few of them. I know that they're going to come back. I don't know if and when they'll reach all-time highs again, but I do know that the first part of Lion's equation there, good companies, we're not overpaying right now, in my opinion. And then the third part of his equation is do nothing, which that's what this is right now. This is the accumulation time, or at least the very beginnings of it. I've been accumulating all year. It's been a terrible year to do that. However, when you're talking 3 to 5 years, hopefully we will all be rewarded for the actions that we take here in this last quarter and into at least the rest of winter is kind of what I'm thinking on this rebound. I'm not going to be too excited about any stock news, positive or negative, until we start to see the dollar stabilize and then maybe a pause on interest rates. That could be March, April, May. I don't know. Okay, but we do know that things have been beaten down so bad that buying a share here or there of your favorite companies is probably not the worst thing in the world if you got a 3 to 5 year horizon. Russ C's here. Good morning. Glad to see you doing a live stream. You're always informative. What are your thoughts on Trex stock, who he has been accumulating over the past couple months? Let's take a look on Seeking Alpha. It's not one that I follow. Trex company. You see they got the warning sign there, but I'll tell you, so this warning sign is based on momentum scores, just to tell you. I'll X that out. So you can't, I have stocks that have that same warning sign, just so you don't freak out. Let me read about these guys. We'll scroll down here. Company profile, decking, railing, outdoor living products for residential and okay, Trex decks. I think I know this, and I think my neighbor actually has the Trex deck boards, which I believe Let's see what they say. I believe that they are plastic. Here's the website. Composite. All right, composite. So here's what we're talking about. Trex decks, obviously in the pandemic, I'm just going to guess that this company went, crazy because everybody updated their outdoor living space. I did. Build a whole new deck. I didn't build shit, but put in a whole new concrete patio in the back and whatever. So let's see what we got. If you're just looking at the Seeking Alpha authors, not a lot of coverage. Wall Street's in at 7 buys, 7 holds, and 3 sells. And then as far as the things that I like to look at, particularly nowadays, is how the future is looking. All right, so fiscal period, this is earnings per share. So we end this year, looks like a standard fiscal calendar, $1.77. That's down from the year before. I'm not really surprised. You got a forward PE of 27. All right, next year could get even lower. So right off the bat in this earnings period that we're in, you could have more to go. This forward PE of 30, I don't know how that stacks up to the competitors, but it's something to think about. Revenue-wise, too, it's the same story. You got negative, this year will land negative, which is probably already in the news, okay? It's this next year that everyone will be looking at, and the early projections are minus 3% for next year. So with just that information, I think, is this the bottom? Here's when you'll know for sure. Be this good or bad. When the earnings come out in January, I assume they'll come out in January, the first week of February, they have to make their statement on the 2023 earnings. So you're looking for a bottom. And this range, what is this range over the past month? Range over the past month looks roughly $50 and the low 40-ish dollars, maybe 39. I probably wouldn't pay this price right now after the run up. Hopefully you made a couple bucks on this, buying it low. But you see there's a lot of short interest in this, so that's got to wear down before you can be set free. And then on the valuation, this is under building products. So the valuation, are they running GAAP? We're just going to take GAAP for it. I don't know which ones they use. They're still above the sector median of other building products. That's 18, and we know that GAAP forward was going to go up to 30. You probably still have some room. Now let's take a look at price to sales, well above on the sector. Forward price to cash flow, well above the sector. I think until that building season hits, this is what I'm going to do as a bottom line for a company I'm not super familiar about. That building season is going to hit right about February, March. If you think about Florida, their building season is going to kick off in Jan, 31 or something. And that's when this one is going to start to get the momentum. If it's going to happen, that's when it's going to start to happen, right into that building season. And so it's going to be, in my opinion, a cold winter for this stock because it's riding, right above the sector. I think you could see a lot of flat coming out of here. They need to lead off the year. The CEO needs to lead off the year with the hell of a sales pitch at the earnings call for 2023. That's what I'll say. All right. Derek says we have not bottomed. Don't do it. Wait until Christmas sales hit lows we haven't seen in years. Wait until SPY 320. All right. So SPY 320, let's take a look. 394 today. Have we done a 320? 52-week range is 348. So in Derek's world, he's calling 320. We definitely haven't seen that, and that would be roughly 10, 20% down. So if you got to 400, right, 20% off of 400 is 320. So that's what Derek's calling out, and that'll, I'm not sure that it would surprise me, quite honest. I really don't, but it's probably not the one I'd buy into myself. I see what he's saying on the Christmas holiday, potentially coming in as weak. That's going to be that's going to be a retailer's game on how they handle holiday. I could see it coming in below last year, but the right retailers, if they have too much inventory, like they're insinuating, if prices come down, maybe we'll be surprised. I'm not sure. I don't know what to think about it. If we have any sort of good news in the stock market, similar to what we had yesterday, if we see a carry of this good news into December and see CPI go down, I could see Christmas being saved in the sense that some people will dig out of their many holes that they're in with stocks. I certainly have my share. And then that might boost the consumer market. That might be thinking about it too much. I don't know, but I could see it. One thing's for sure about Christmas, I think, across the board for the average consumer is the big purchases are out, right? The Lexus for Christmas, they always run that commercial. I think that's probably out this year, is what I'm guessing. And, whether the vacations still happen, I don't know. It might be too early to tell. We are going to find out probably the week of Thanksgiving when those sales come out, and they always do on Cyber Monday. CNBC's always got some jackass at Macy's who's, telling you how the sales have went. We'll find out a lot. That's always an interesting day to tune into CNBC Cyber Monday. Mark your calendar if you're at work or listen to it on your headphones, whatever. We'll know a lot more there because if Black Friday week, which is basically a week now, if that comes out flat or down, then you're going to see, to Derek's point, you'll probably see a lot of weakness in the market because people are just going to take the way that it kicks off and they're going to assume that that's the way it finishes. All right, I got a couple more questions. I want to show you one thing before I forget, and then I always answer all the questions on, so I promise to do it. This is another thing, and I said this on a video recently, but I want you to think about these earnings, okay, and what can help your stock's earnings. First of all, hopefully, you're only buying stocks right now that have EPS. It's not to say the other ones won't go up, but the EPS, when we talk about fundamentals, and we got a long way away from fundamentals during the pandemic, but your EPS is really your protection to the downside, okay? And you see this headline here, Snap, Google, Pinterest, they gain following the Meta layoffs, and we saw what happened. Twitter's laying off pretty much their whole world. Google's been rumored for layoffs. I'm not sure about Pinterest. Let's see if Pinterest is. Pinterest advertising was holding up pretty good. I don't see a headline here about layoffs, but let's do this a little differently. Layoffs, headlines. All right, and we're not going to read all these articles. We're just going to get the headline. So Meta layoffs. Meta. Microsoft layoffs. This was November 3rd. Microsoft's recent layoffs with its current update. Okay. Twitter, we know. Snap, we just read that one. Lyft, lots of layoffs. Twitter, we know. Pepsi considering layoffs. Vacasa, that's its small travel one. Beyond Meat, further layoffs. Warner Brothers, ad department layoffs. Intel, we heard about that. Intel took a boost when they announced this on October 12th. And so my point is, Rivian, Steelcase, you get the idea. Lots of layoffs coming in the headlines. And what you see with a lot of these companies is that when they announce it, the layoffs boost the EPS. Now, here's the catch that most people will miss. Sometimes when you do these layoffs at the corporate level, if you work in a corporate firm, particularly something like Meta, you're going to get a severance package. So that layoff doesn't really pay off in dollars until probably 6 months later. So if you lay off Joe today and his $200,000 programmer salary or whatever it is, he's going to get 6 months, right? So it's going to be May before you start saving money on Joe, just as a broad example. But by getting rid of him today, you start that process. And listen, Wall Street is not running for president, okay? Wall Street loves layoffs because it adds to the bottom line profits. So if you see that out of one of your stocks, layoffs, that's usually good news because it's one of many ways to boost your EPS. We were looking at Trex, right? If the market is soft on what the consumer is buying, the other way to generate EPS is to lay people off, right? You've heard a lot about pullback in advertising, and we've certainly seen that. And then we have the X factor that I've been talking about lately. It's the strong dollar. Okay, so if you are in an international stock, Google off the top of my head, certainly Microsoft, certainly anybody big like Pepsi, you're international, this is killing you. And a lot of people said it in their earnings calls. Google, frankly, came out. I wonder if I can find that. Let me show you what Google said. Is Google stock? Let's see if this is it. After the Google earnings, I've shown this once. There's a CFO statement in here, if I found the right one. But the CFO came out and basically said that if you took constant currency, right, which eliminates the disadvantage of the strong dollar, they would have been up by, they basically would have had the earnings report that everybody wanted them to have. Let me see if I can find this here. Earnings news. Currency, here we go. So down here somewhere, there's a note about headcount, right? Our Q4 headcount addition, so that's different. That's the layoffs part. But that's another place that Google kind of screwed up is they talked about layoffs, but then they added a bunch of people in Q3. So it's a mixed message. I have a feeling that they're going to come around though on Q4. And then Chief Business Officer blamed most of the downbeat on YouTube on a tough year-over-year comp. That's not what I was looking for. Financial Officer directed attention to heavy headwinds from the strong US dollar. Headline revenue growth of 6% would have been 11% in constant currency. Now, obviously, you can't play the shoulda, woulda, coulda, right? But it's important to know that as this, hopefully the strength of the dollar, chips down into a more reasonable range, because that's going to boost your EPS. Okay, so those are the three things that you're looking for from a good company as opposed to sales. How can EPS rise when sales are dropping? They're layoffs, cutbacks in things like advertising and the dollar. If you start to see that storm, if those three things start to pile in a little bit onto your stocks that are supposed to grow more, it will help. Okay, now does it take a $2 EPS and make it a $5 EPS? Unlikely. But it could take, if we go back to Trex, it could take a company that was going to be minus 5% on the EPS line for next fiscal year. It could bring them to flat. Right? Now their sales numbers are going to go down, their revenue top line could go down, but they could preserve that EPS line. And in my opinion, when you preserve the EPS line, you preserve the bottom for your stock, right? Okay, wanted to get that in. What else do we got here? John Spencer, good to see you. Can you imagine what the market would have done if the inflation number had come in hot? I mean, unbelievable, right? And we are definitely still at risk for the next one to go in the wrong direction. I don't know how much CNBC you guys watch. I have it on in the background. I don't sit and eat popcorn and watch it, but I have it on in the background. Particularly at lunchtime, there's a halftime show that's usually pretty good. And they had that Jeremy Siegel, who's a professor. He's on the show all the time. I don't know if he's at Harvard or where he is, but he went on. I'm just going to assume this guy is way smarter than me. Okay, he went on the show yesterday and was talking about how the Fed uses antiquated data that doesn't show real time, and somehow in his brain he had calculated that inflation was down significantly more than what we saw in that CPI report. So I don't want to speak for that person. They're much more well-known than I am, but just look up Jeremy Siegel. I wonder if they made a post about that. I don't even know if this is how you spell his name, to be honest. I don't. Let's just try Google. Jeremy. Oh, it's this guy. I spelled it wrong. Siegel, and there it is. So this was that halftime show yesterday. There's all this freaking ads and stuff everywhere. We're not going to watch it, but here's the bit. Joins halftime to discuss Fed statistical sources, signs of effective inflation measures, and what to expect for monetary policy. Went on to, I'm not going to quote him, but I think he went on to say like 0.5 on the interest rate hike for December, and then potentially a pause in January, February. All those things, speculation, but you get the picture. All right. Who else do we have? Speaking of your overpays, yeah, Enphase, absolute. I mean, I still get good trolls on those videos calling me out for it. Whatever. I made a mistake here. But honestly, I would have never made it into this peak period. So if you go back to, was it year to date? Let's go to 1 year. I'd have to go back and look. And if you don't know the story, I bought into Enphase, let's just pretend it was $200 around Christmas time last year. I added a little bit, and then it sank when Biden couldn't get his solar whatever stuff together. And so I sold out. So I lost money, straight lost money on it. And, I was like, hey, I guess, I didn't realize how sensitive the stock was to short-term tax credits, and I bailed. And you see what's happened over time. So it went back to 200, and the trolls are out in full force. And the irony of this period, looks like April, is, whatever. I laughed it off. And then the stupid thing went down to, 140, I think is in 137. So conceivably, if you wanted to go scoreboard, you know, whatever my cost basis was, approximately $180 if I'm correct. I sold at 120, lost 60-ish dollars per share. It went back up to 200, the trolls came out. It went back down to 130 something odd. The trolls shut up. I didn't even bother making a video that said, hey, by the way, I could have bought Enphase here for less than my cost basis was. So I feel like I did the right thing, right? And then it went on a run from there. I did not invest in it. And now you're at 297. And I wouldn't, I mean, it's going to go to 400 tomorrow when I see it, but I really just do not have any interest in it. I'm at right now, forward P of 70. Okay, next year, forward P of 57. After that, 40. So here's what we're talking about. December of 2024. Okay, the end of 24, if they hit 671, then you'll get to 46. All right, that out of all the things that are available on the market today, this is not intriguing to me. And from a sales perspective, the goal is to grow here in 22, awesome year plus 67%. Next year, their comp score is going to look bad comparatively, right? So the compound factor of plus 36% will be less than the year before. And then in 2024, excuse me, 2024, same thing. Price to sales at 18. Really? Price to sales double digits for the next 3 years at today's price. I don't know why it is what it is, and congrats, like for real congrats to anybody who survived it. I chickened out. There's some people, if you do this 5-year chart, so pre-COVID, let's just, go way pre-COVID into 130.20. That was a $31 stock. They 10x'd multiple times, right? Like they could have cashed out at 10x multiple times, which is amazing. And that's what you hope for with a stock. The thing is, the 10x thing doesn't happen, like it doesn't keep happening over and over. Like I don't expect, let's just take for example, January of 2020, and where were we at? The peak of 21 was 267, okay? I don't expect another run like that over the next 2 years. The money was made. I had a chance to double my money from 180 if I would have hung on and sold today. But the 10x is over. That's not going to happen again. And that's because Enphase has grown up, right? And they're doing good things. So I don't feel it. If I was going to buy a company right now and I wanted it to go up 20 to 25% from here in a relatively safe manner based on EPS and sales growth, it wouldn't be Enphase, okay? It would be much more likely to be something like a Google and just, avoid the short-term downside. Solar, I think, gets hit eventually. A lot of it probably depends on the recession and if and when that starts and how it affects consumer. But the one thing is for sure is Enphase benefited without question from the fact that we were all home with extra money and people added on projects to their house, okay? Not to mention in the 20 to 2022 era of home solar, the prices for selling energy back to the grid was at a certain level, and a lot of that is pared down. So the money-making factor of solar as opposed to the money-saving, right? There's the money-saving part, and then there's the money-making part. And the money-making part, it looks like maybe in jeopardy for the average homeowner. So keep that in mind. Do massive research on M-Phase before you jump in at this level of $300 is all I'm going to say there. Okay. Lower highs and lower lows. John Spencer, Motley Fool loves Trex. Okay. So, and that would be interesting to read their statement, why they're big on it. Let's see what some of the headlines are here. So these are people who write these. It's basically me writing an article on Seeking Alpha, right? I share my whatever my bull case is. I throw some stats at you. Let's see what this person's bottom line is. The people who write on here, you know, to be fair, if you like reading, I enjoy reading. I like YouTube videos too, but I also enjoy reading just people's opinion. And this guy, Wide Alpha, has nothing to do with Seeking Alpha. Let me get a drink here. Wide Alpha says Q3 results were far from surprising, given that the company delivered in line with expectations. We believe the shares are responding poorly is the result of management's commentary, which appears to be hinting at weakness continuing into 2023. That would certainly make things weaker. Still, there are positives. The guidance that Q3 was the trough in terms of lower profit margins and inventory. Earnings are expected to start rebounding next quarter. Hope for a significant sales rebound next year appears to be fading, with the company currently producing to a target of $1 billion in 2023. So that's a negative statement, right? Hope for a significant sales rebound appears to be fading. If things improve, the company has the capacity to ramp up production, but given the weakening economy, that would be surprising. In any case, given the widespread pessimism and the low valuation, this could turn out to be a great time to invest. I don't know about this sentence, if he sold me on anything, given the widespread pessimism and low valuation. So I disagree with the term low valuation. However, the time to invest could come into play at the right moment for the long term. You know, if I studied this company and I said to myself, you know, what's the future look like for this composite decking? As a homeowner myself, I'll tell you one thing about wood decks is they're an absolute pain in the butt to take care of. And if whether you have stain or paint or whatever, it's a nightmare, because you got to do that and waterproofing every year. So I like the composite decking. I will tell you also, as a homeowner, as I alluded to earlier, I took out an old wood deck that I didn't want to rehab and paint all the time. I put in concrete. Okay, and concrete is pretty inexpensive. And it still has some maintenance if you want to talk about pressure washing, and you do need to put on a waterproof coat every couple years. However, it's probably less expensive than this stuff. Now, I don't know where the materials are on these, but hopefully they can keep the price and the margins in a good place. Paulie, over 50% of people are doing Christmas shopping on credit, buy now, pay later. And a good call on that, Paulie, is that when you talk about will Christmas season be a total bust, never underestimate consumer credit devices in that world. So I think you bring up a good point. You also asked about me and Amazon. I still like Amazon, but now that after just getting, destroyed on some individual picks, I've been pretty consistent on my double down, triple down on QQQ. So I want to build that up to 100 shares. I still have 40-ish shares to go on that before I pile into another individual stock holding. So I like Amazon. I'm glad it's in the queues. I think Amazon long-term is solid, a little high on their valuation right now if you go on earnings. And but I do still like them. And I think that Amazon changes everything when it comes to shopping online. And as much criticism as they get for building out their factory and distribution footprint and then having to scale it back and potentially sublease those spaces, the fact that what they were building for, what they saw in the pandemic, which caused them to lay the groundwork to build out the way they did, it just gives you an idea on how big they can get, right? No surprise it was temporary, right? Because the way the world was, no surprise. But they saw something that made them lay out a footprint. They had to scale it back, but it just goes to show you how big it can get. And when you start talking about the logistics department, particularly through the air, it's pretty darn impressive what they're doing. And we were probably way ahead of the curve to say Amazon drives UPS out of business, right? That's probably a little ridiculous. But if they get a portion, if they get 10% of UPS's business in a perfect scenario, or FedEx, or a combination of the two, you think of what that does to a company that is not a logistics company, right? They have a big part of that, but it's just icing on the cake in a lot of ways. So yeah, I don't think you can feel too bad about buying Amazon in this weaker market, with the assumption that you're holding for 3 to 5 years, right? I don't know that it's a trading stock. All right, let's see. Derek says, I think an important piece to remember is the market and the economy are not the same. True. COVID, economic sucks, market flies, the market will turn green before the economy. That's a good point, Derek, that I've actually thought about. If we go back to COVID, and I'm sure many people have said this, but remember how the market went up when we were still stuck in our house. Now, some of that was because in whatever it was, March 15th of that year, we all thought we were going to die. Excuse me. We all thought we were going to go to the grocery store and catch COVID and die, right? So that was about as low as you're going to get on the stock market. And so the rebound recovery was one layer that said, okay, we're not going to die. But then the boost that went on ahead of that said, well, wait a minute, with all this stimulus and stuff that's coming in the market, we might do better than we thought. And we certainly did, but there was certainly also a level of speculation in there. Russ, DCA is 43 on Trex, so he's above the water. I'm going to hold for now and wait if it goes much lower. And you're 5 to 10 years, so you know what? Assuming you studied it, again, I got to go back to the fact of if the pricing is the same for Trex to build a deck, let's just say it costs 30% more to build a Trex deck than a wood deck. That appeals to me. So as a homeowner, there is a value in there for me to never paint it, to never worry about termites, to never worry about things scratching up. Not to mention, I'm guessing if I dug deeper into that website, that there's a lot of different options in terms of design and colors and things like that. You rarely pick up a 2x4 and show it to your wife and say, look how beautiful this is, right? It's the stain color that you're looking at. It's all these extra things you got to lump on top of it. So it's not, I like the ingenuity of it. It'd be interesting to see what the competition is. I'm guessing this is the #1 brand name in the space. How hard is it for someone to replicate it? But if you're in at 43 and this one is 40 whatever, 9 now, I think we are 50 today, then you're good, man. Whatever. I wouldn't, maybe you look to buy if it goes below your cost basis. Otherwise, you let it ride. There's worse stocks in the world. You got an EPS anyway. All right, quick check on the market. Nasdaq had a weird, right before I came on, it was down to plus 0.5%. And now you're back up to 1. The high for the day was 1.3%. Vicky, good to see you. Derek, how do you feel about housing market? So, do you think, I don't think house prices come down. This is Derek, cost of building news so high. I want to be wrong. Tell me I'm wrong. I think you're right. I think the froth part is Gandhi, the multiple offers for an overpriced house. But I think that buyers know now they're not in the market and they're not scared, right? They can be confident in shopping for a home again, is how I would put it. So in my neighborhood, which has had no problems with house sales, and it was some part of the speculation, if you will, where people were just paying anything. We have seen prices come down. My simple house, which, you know, at the peak, I think it floated closer to like a $435,000 valuation. I'm in Cincinnati, Ohio, so we don't have like we have $2 million houses, but there's not a lot of people who live in them. And that has, so if I was at 435, I'm probably at the fours, right around the fours right now. And if I tried to sell in January, which is the worst time to sell in Cincinnati, you're probably looking at 390. Okay. So I'm not going anywhere. I got kids in school, all the things. And, you know, I'm keeping my mortgage and paying. But I agree with you, Derek, that I don't see the core price of a house. If it was $450,000 last year, let's just pretend mine was, you know, you're going to save 10% and you're going to pay more in interest rate. So it's probably a wash. And then from there, we just have to see. Spring will be very interesting because we have until spring in Cincinnati, the housing market picks up when the weather warms up. And I'm sure it's the same across anybody who has a winter, right? Nobody likes to move and nobody likes to look at houses when it's freaking 20 degrees and the wind's blowing. Not to mention you got kids in school, so you're trying to finish the school year. So you get into March and April in Ohio and the market starts building again. So if you have kids, you start to say, great, they finished their school year at this school and then we've got all summer to acclimate to the next neighborhood, whatever. So that's when any sort of rebound, if there is going to be one, that's when it happens. And I just don't know how much farther it's going to go down from there. You know, if you had to buy a house and you didn't have kids and you lived in Ohio, I would tell you to buy on January 10th because it's going to be the coldest, shittiest time in the market, and you're going to, for the inconveniences you pay of moving in on a snow day, you're going to save money on movers. You're going to save money probably on your house because there'll be, you know, hardly any competition. And then the competition is going to be less with mortgage companies, etc. But, you know, if you think you're going to wait till April and see prices down more, in my neighborhood in Ohio, I don't think you'll see it. It was also very interesting. If we look at one of my dogs here, Rocket, who I am going to hang on to until the next housing boom. I'm down, I think I'm at 20. So I'm down, well over 50%. Horrible time, horrible idea for me to buy a mortgage company during the pandemic. But we all learn new lessons, and I bought them and Zillow. I'm down easy 50% on Zillow too. But eventually on these companies, I will add a few shares to lower my cost basis. But each of them, Rocket, let's see, let me get this down a little bit. So Rocket went from 654 to 788 over the past 24 hours. You know, that's not going to save anyone's life. But it was a nice boost, and to me, I put it in that classification of stocks that are just absolutely hammered right now. And they're going to get those little 10% potentially even higher boosts when we have good market days, because they're just rock bottom. They're just rock bottom. I can't believe how well Zillow has held up. So it's not the greatest for me because I think I'm at $68, okay? But I have no interest in selling Zillow. I think if anything, my hypothesis on Zillow being far and away the market leader only grew more this year as we watched some of the other HomeAways and Redfins and whatever. Their stocks have tanked. So I feel good about it, but I have no plan. I can't imagine a scenario right now in the next year that Zillow goes back to $68. Okay, I overpaid. If I wanted to break, if I want to call it one of Lion's rules, I overpaid. I will pepper in maybe in January, maybe the next time it takes a huge nosedive, I'll pepper in little lots of 5 shares and lower my cost basis a little bit, but I'll be a holder for a while. I think Zillow solidified itself pretty well. I paid too much for the stock, but over time, hopefully I'll get that back. All right. Chestad's back. Good to see you. Derek says Enphase 27p a decade out if they hit their numbers. Yeah, and that's a big if. You're allowed to like a company and hate a stock. This is true. You got some good ones today, Derek. Kai Lee, I told you stock prices cannot beat against interest rates. Do you agree now? Yeah. So I will say one thing that here's what I thought was going to happen in 2022, and it obviously did not. I was not surprised in January when the Fed came out and said, now's the time, here comes the interest rates, etc. When that started, and then I started after that first crash in January, February, somewhere. Let me see. So we'll go through the whole timeline of my thought process. I have no problem whatsoever sharing my stupidities. But so we came into the year at 400, somewhere around here. Okay, from the Qs at, call it 387 down to 344. That first leg down was when the interest rate started. And I thought to myself, no surprise, but they can't do what they ultimately did. They can't raise interest rates to 7% because of the debt load on the country, right? It's impossible. And they can't keep hiking 0.75. Dead ass wrong there. And then the other thing that came into play, which didn't help matters, was of course the Russian invasion, the collapse of everything, collapse of not collapse of the oil market, but the tighter oil market. You had the crypto implosion. It was just one thing after another. So I did not walk into January of 22 at a high of 400 for the Qs and think to myself, the Qs go to 500. That was never, ever in my thought process. What I did say through most of the stretches, we're getting close. We have to be getting closer to the bottom in my mind, and I'm going to keep adding my shares with my goal to get to 100 shares. But I slowed significantly, particularly through the summer. I slowed significantly. I still don't have 100 shares of Qs, right? But patience would have paid off. I should have just let the first quarter of the year go, and I would have saved a lot on some high cost basis that I really didn't need to buy. But I swear to God, I'm not upset about it. Like it was a mistake to fight the Fed, as they say. But I also know that in terms of the Fed, we got just hammered in 2022 with bad news. And it wasn't just interest rates, okay? We just got hammered, but the Fed going 3 times what I thought they would certainly didn't help matters. So if Kylie told me so, as is stated here, then I agree that I needed to wait to hear just how crazy the Fed was, and here we are today. Just Dad says, Case Shiller, home prices declining. So declining and tanking, I think, are the two different words, and everything is market specific. Okay, so I'm not surprised home prices declining. If you watch some of those big guys like what's his name, Graham Stephan's always into real estate. I haven't watched him in a while, but his whole feed that, once a week I catch up on some of the guys like to watch, and I see his thumbnails. It's all like the housing crash is here, or the housing crash is here, but he's way the hell out in California. And if they have a housing crash, that might, in a perfect world, bring their house affordability back to impossible, right? From ridiculously absurd to no reasonable person with the family can buy a house there. So you're going to go from a $2 million, I'm making these numbers up, right? $2 million house, 3-bedroom house, and maybe it does go to $1 million. And I still don't know who the hell is going to buy it, but somehow Californians and the people on the West Coast find a way. In my neck of the woods in Ohio and greater Midwest in general, our prices went up, maybe 20%, 25% from the beginning of COVID to the peak of 2022, and they might go down 20%, but that's going to land you at flat. And as a homeowner and someone who keeps paying their mortgage, the flat is fine because you're taking out principal, and if you're living in the home, and benefiting it, assuming you don't hate it, if you benefit from your family having a home and going to schools and doing what they do, then to me, it's just like, okay, I wasn't going to sell anyway. And so I missed, the peak of the peak, but it's not like this thing is underwater. Probably the scarier thing is how many people are about to go underwater on their ridiculous car loans and whatever they paid at the peak of the housing prices. That's what's going to be weird. I don't know how long that's going to take to show up, but it will. Paulie thinks Enphase is going up based on how expensive oil is. That doesn't hurt it. Certainly doesn't hurt when, and especially if you're in Europe. I don't know what their European market is, but you got to figure Europe is like scrambling to come up with other ways than Russian oil to power their world. I would assume that green energy sources are a part of that. Very hard, though, to wake up one day and say we want to power London on renewable energy. I can't even imagine how much that would take. I mean, you see solar farms out here in Ohio. If you drive in between the big cities, there's a couple of freeways. So I live in Cincinnati. Let's say I drive to Columbus. 2 hours away, 100 miles. In between Cincinnati and Columbus, there's a stretch where there's really not that much of anything. And if you go in those back roads or whatever, you'll see solar farms. And these relatively big solar, like lots and lots of panels, it's powering one farm. Like that farmer is running his irrigation systems, whatever electronics he has for the animals and whatever. It's just, I don't see a day when New York City is lit by a renewable. I'll be dead. Let's just put it that way. I will be very dead when New York City is 100% renewable. Russ, again, Nasdaq high was just over 16,000 in November. How long do you think it'll take, to get above that? You're saying 2025. 2025, let me just look at it real quick. I don't think that's a bad guess. So here's a 5-year, and you're saying November. So I'm not very good at drawing lines on charts, but I'm going to try to because I'm not a technical analyst. Let's see if we can take this top of 20. This is after the the New Year's Eve stock market meltdown in 2018, sort of the China crisis, whatever. And so sometimes I'll just come in and just say what is a more reasonable line. So if you had a line like this and you wanted to say that this is where the Nasdaq should go, right? This is the direction it should go, which isn't really fair because the economy changes. It looks like I would need, it looks like your 2025 could be in that mix. I mean, we have to use our imagination here and try to picture, you know, where these two worlds would meet. And I'm going to guess it's somewhere up here. So I can buy into that. Kylie says 2024. I don't need the peak to get back to par. So my par today, which I will, you know, add shares, my par today is call it 360. So I don't need 400 to be at par. And hopefully I'll be able to get down into maybe the 330 range, certainly like 340. And then I'll be in good shape, and then the rest is butter from there, right? And this isn't even total returns. This is just price action. So we'll see. But 2025 doesn't sound horribly off. You figure earnings estimates, man, I can't imagine earnings estimates go, you know, they're all trending negative right now. So if you, who are we on? Zillow, these are all bad examples. Let's just go to Google. And they do a good job on Seeking Alpha. Oh, right here, earnings revisions. Okay, so, and then this is consensus, right? So it's everybody divided out. It's not exactly brain surgery. 482, 546 next year. But here's your revisions for the last 3 months. EPS down 38, revenue down 39. And if we look at this chart, you can see how the earnings revisions have come down across the board. And then here, which, you know, good luck to anyone projecting Google's EPS in 2024. And I would love for anyone to share their formula outside of throwing a dart because it's impossible. But let's just say, since it's a company that they do get to hear, or excuse me, here, $6.38, you know, that's fine to say that out loud today, but look at the 6-month trend, minus 16%. Over the past 1 month, that consensus has gone down 2%. And then you get into revenue, and you see this graph, how it has changed. Let's see what the biggest, right here, 2024, 348 billion. So you can come out and say that out loud if you want, but over the past 6 months, that's down 11%, and it's taken a slight hit over the past 3 months. So until we start to see more things on this side, which is revenue up revisions, earnings up revisions, then, you know, the farther out the Nasdaq is going to have to go before it gets back to those 400s, right? Because the 400 mark of the Qs is, we know now that it was a speculative top, right? It was assuming things continued on a pace that they did not continue on, and the Fed effectively shut it down. So in order to get back to that perceived value, right, the Qs at 400 had a perceived value of this is where EPSs are going to go. Well, now the EPSs have went down, prices went down. We need those EPSs and revenue numbers to start swinging back up to support the next $400. That's the way I look at it, the fundamental way, if you will. And that's, I don't see that in 2023. and then maybe start kicking it around in 24 with the realization coming in 25. I don't know, just saying out loud. Derek's apartment lease is up in June. Been trying to prepare for what to expect. We do have a full down payment. So the full down payment is huge, right? That's it's a big part of it, and I assume, you know, that if you have a full down payment, you probably have a pretty good credit score. And, you know, it's a simple, the only thing, so some people have been able to cheat the application process over the years for mortgages because they were a lot looser. And I would expect in June of 2023 that the mortgage application process is going to be much tighter. So whenever that happens, by tighter, it is generally your liabilities versus asset scores. Obviously, down payment comes into play. And then your income levels are going to be huge for what amount that they're willing to give you. So there's kind of like the point, like, you know, you can probably buy a house tomorrow, given that you've saved up money, but is it going to be a $100,000 house that you don't even want? Or is it going to be the forever home, right? Which in Cincinnati is going to cost you $300,000 to $500,000, depending on what you think forever is. Jordan, good to see you. My first mortgage rate percentage was in the sixes. I want to say 6.5. And then I am not at the lowest tier right now. So whoever got the lowest of the low, like time the mortgage market, I think we are in the twos, high twos. But there's people who got lower than me. I remember talking to some guy this summer at my daughter's swim meet, and he nailed the bottom of it. But he refinanced twice to get to the bottom. He was obsessed with it, and good for him. I sort of took the easy win, and then I was done, and I want to keep paying principal as opposed to keep paying refinance fees. Everybody has their own way of doing it. Tesla in this market condition, I think is, so just to call myself out, I'm not a huge Tesla guy, and I think it's a little treacherous, particularly in this freaking Twitter thing. How can you, so I like Twitter for entertainment, and I actually like that Elon Musk bought Twitter for the purposes of Twitter. However, in the purposes of running a company like Tesla, it's probably not good news that he's fiddling around with this dumpster fire that is Twitter. Man, let's just go to the board. 2023 EPS, if he hits it, 576, forward PE of 33. Not bad, but this is what I was talking about on the 10X with Enphase, and you've seen it materialize with Tesla. So the amount of growth is going down, okay? Still growing, but these 10X stock numbers that everybody shoots for, I think those days are in the rearview mirror, okay? Revenue much stronger than earnings, plus 50 is phenomenal. Next year, plus 40 if they hit it in a tough environment, and then boom, boom, boom. Still growing, still a lot to be proud of, not growing at a 10X stock price like everyone seems to think that type of stock grows on trees. It doesn't. And Tesla is one of those stocks, but the boat to get in 10X was before the pandemic. Right, was in late 19, early 20, and you had this, and then boom, it took off, right? So 10X is over for Tesla. They're just too mature. 10X is over for Google and anybody like it. They're too big now. So if you're buying Tesla because you saw some things during the pandemic, you missed 10X boat, for sure. But what could be left is, you know, outperformance from what they expect. And, you know, the stock could continue to go up at a reasonable level, but 10x is over. The 10xers are sitting in this market right now somewhere between $5 and $10, and they're risky, and you just have to figure out if there's something to it. I would rather put if I'm looking for 10x, like it seems the whole world is after COVID, you've got to dig, you got to start with something that no one's ever heard of, or very few have, and you have to just look at it and make a guess. I have never hit a 10x stock, which would basically be a stock below $20. Is almost where you have to be. Unprofitable, under $20, then it's hitting plus 50% sales figures, and it's chipping away at EPS. It's not easy. And needless to say, in an environment like this, you can expect a lot of this on a 10xer, right? A lot of ups and downs. And just like Enphase, I bailed, right? Because I thought it was too expensive, but it kept going. So you have to have the stomach for it. Just Tesla's considering exporting made in China electric to United States. That's interesting. Russ would never bet against Elon. And I'll tell you, love or hate Elon, I don't have first of all, he's hilarious on Twitter. Like, I could totally drink a few beers with Elon, and I have no doubt he would have me in stitches. He definitely has a drive, an internal drive that is different than what most of us have. So betting against is one thing, right? Shorting Tesla stock is one thing, and I just want to be clear, I'm not saying that. I'm just saying there's other companies out there with lower valuations. I'm not saying Tesla's going to zero. I'm saying there's a lot of distractions right now, not to mention what will likely be coming in the car market, of course, is tighter competition. Not just in EVs, but now these prices are going to come down at some point, and it's just hard to imagine that Tesla's immune to that, but maybe they are. Derek's mad because I got mortgage rate under 3%. Pauly, FTX. So the funny thing about FTX, I had about $1,000. I can't even remember. $1,500 in Voyager across Bitcoin, Ethereum, and stupid VGX coin. This is how bored I was, I think, during the pandemic. They obviously went bankrupt. I have zero of those dollars. They send me letters all the time about how they're gonna whatever. Don't care. I assume it's gone. So FTX was gonna buy Voyager's assets, and that was gonna be part of the compensation plan, of which I expected to get, maybe $100. But I was like, cool, maybe I'll get a check one day. But now FTX blew up. So Voyager, recovery is gone. The market for anyone giving a hoot about saving a dying cryptocurrency exchange is gone. And the number one lesson that I learned, that I think a billion other people learned too, is all those people that used to come on the comments for crypto videos and Reddit threads who just were adamant about, don't keep your crypto in an exchange, keep the real thing. Keep your key codes or whatever they are, those are yours, keep them in a different way. They were right. I did make a couple bucks off of the Bitcoin Trust during the pandemic because I was in that. I don't even know if this thing is still here. It is. Grayscale. I was super comfortable with this. Because they actually hold the actual tokens, and somehow they cheated because they're in OTC markets to make this product. And I would consider buying it again and just holding it for a trading thing. I like the concept of Bitcoin from what I've studied, but I'm not someone who studies it very deeply. But I think I would never buy anything except for Bitcoin in the future. It's just, It was the real one. It's the one that started the whole thing. And a simpleton like myself can understand the advantage of having a set amount of it out there. So if that's a baseball card, if that's a 1984 Porsche, there's only so many. I can get behind that. What is it really worth? That part I don't know. But FTX screwed me on the Voyager bankruptcy plan. Frodo-looking guy, loaned himself everybody's crypto money. Actually kind of funny. My top guess for 10x in the next 10 years in BOC. Warren Buffett's great nephew and his buddy have plenty of experience. That's interesting. 780 million market cap. I have not studied it, but I will. BOC. Oh, okay. Actually, I have heard of this, but I need to read about it more. Since we brought it up, I'm just going to share with the group here. Together with its subsidiaries, outdoor billboard advertising in the Southeast, surety insurance and brokerage, broadband investment businesses, high-speed internet service to some places, 3,900 billboards. Okay. I'll say one thing, because this is Warren Buffett's nephew, as you say. You know, he certainly has access to the business side of Warren's lessons over the years, and he certainly has access to the family capital. I'd take him over a guy starting a tech firm in their basement asking for $1 million, you know, to increase their head count in this phase. So that's a good one. I'm actually going to follow that and try to learn some more about it. Appreciate the tip. All right, guys, lunch break's over. We got to get back to work. Nice little rebound this week. Thanks, everybody, for joining the live stream. I hope you guys are doing good, and we'll see how things go. But I don't know, man. I like adding a couple shares here and there now through February on your favorite big companies with EPS and growing revenues. It feels like for long-term investors, we could be on the cusp of being able to set ourselves up for a decent return over the next 3 to 5 years. All right, have a great day, everybody. We'll see you soon.